Sense is run by a bunch of investment bankers, and their modus operandi.
Hello, I'm Fernando Luque, editor for Morningstar, and I'm joined today by AlbertAbehsera. Albert is the manager of the UBAM Japan Opportunities, and he's probably one of the most experienced managers in Japanese equities. Thank you, Albert, for being here.
It's a pleasure.
Albert, more and more analysts are recommending investing in Japanese equities as Europe is really in real trouble at macro level. Why would you say it is a good moment now to invest in Japanese equities?
I think the short answer is that Japan is such a chronic underperformer, and that investors have generally, been shying away from investing in Japan for so many years, and particularly since the Lehman crisis, that when you look at valuations of Japanese equities, whether you look at valuations on a book value basis or on a price to earnings basis, or you look at recurring profit growth of Japanese companies, the case is so compelling that if indeed you want to be exposed to equities, which is I think the main problem nowadays in the world, is that, answering that first question, that Japan must be the market that comes up as the most attractive from all these points of view.
Yeah.
The fact that it's about to recover its underperformance, and that it is, from a valuation standpoint, one of the cheapest markets in the world.
Yeah, I know that your investment philosophy is based on 4 big themes: valuation, a small and mid cap, M&A activity, and fallen angels. Let's begin with this first big theme, which is valuation. I know that you have already mentioned this argument, but can you be a little more specific on this one?
Sure. I think you have to figure this as being, in fact, 4 valuation themes that are like 4 ponds where you have, obviously fish swimming in these ponds, and with the only peculiarity that a fish can basically be in more than one pond. And so we start with the low value stocks. It's a starting point. You look at what is low value is basically on a PBR basis. You look at whether the stock, based on the value of its assets, is undervalued, meaning it is trading below 1. Obviously, the lowest possible PBR is sought in the process, but it's only a starting point. Mm-hmm. Because with low value, you then have to look for other characteristics that are going to make the stock attractive, because otherwise you could end up with a perennially low value stock, and you could be in a value trap. Mm-hmm. And that's where the other themes come into play. And if I could just mention them in succession, not in any particular order, if the stock, in addition to being a low-value stock, is also an M&A candidate, being M&A because it's already owned by another, mostly Japanese companies. You see very few M&A deals originating from foreign companies, so it's within Japan proper, between companies in the same group, and so if, for instance, we have one stock called Torii Pharmaceutical, where the main shareholder is Japan Tobacco, which is one of the biggest tobacco companies in the world, the biggest in Japan, and this is a small subsidiary, and the stock is trading as it is at 60% of book. Then the assumption is that in addition to its low value, in addition to its earnings and the quality of its management and so forth, which we always look for, there is the potential for JT to say, well, the stock is so cheap now that I'm going to buy out the minority shareholders and therefore pay a premium to buy them. But even with the premium, I'll be buying them much cheaper than what I actually put it on the market for when it was first listed or when I first invested in it. So that's the M&A theme, and we've done about half a dozen deals in the M&A theme, where this has happened, and this has contributed to positive performance in the fund. The other themes are the fallen angel theme, which is when a stock has fallen by more than 20% over the last 12 months on a rolling basis. And we look at whether that is for technical reasons, market reasons, or whether it's due to the company's performance, and whether from an earnings standpoint, and whether that particular event that led to the decline is only a temporary thing, or whether it's more of a structural nature. If it's of that temporary, in our opinion, and based on our analysis, temporary nature, then we will obviously consider the stock as a candidate for investment. And then obviously you will find that maybe a fallen angel is also a low value stock. And it may also be an M&A candidate.
Yeah.
And then the fourth and last theme, again, not in any particular order, is the small and mid cap. And small and mid cap is a sector that becomes ever more interesting, because 90% of the companies in the small and mid cap area are in the domestic side of the economy. And at a time when Japan is suffering from a strong yen, and from a decline in demand from its major markets of China and in particular Europe, that domestic demand is really where the possibility for Japan to offset the decline in foreign demand arises, and where the government and the Bank of Japan are making the maximum effort, for example, to fight deflation, so as to change consumers' attitudes towards buying today and not postponing any buying until tomorrow. So when you look at the medium and long-term trends for the Japanese economy, you cannot ignore the domestic demand story, which could become the biggest story in the Japanese economy and stock market on a 3 to 5 year investment horizon. And you have the small and mid caps that are really where the action is in that particular sector of the economy, domestic demand.
Yeah. Do you mean by this that the strength of the yen will affect more the big companies, the large cap companies, than the small and mid caps?
Of course. They're much less exposed to overseas clients. They may be exposed to orders from companies that are Japanese and have foreign clients, and so therefore they might suffer indirectly from that. But most of them are in areas that have nothing to do with foreign demand. Yeah. And so like they're in retail, they're furniture manufacturing and telecoms, and things that have nothing to do with what's happening in China or elsewhere in the world.
Okay. Well, Albert, thank you very much for your view on
Pleasure.
Japan. Thank you very much.
Thank you.
Run by investment bankers, and Morningstar's total help make